Much. All right, let's bring in Fox News, Fox Business real estate contributor and Mansion Global host Katrina Campins. Katrina, it's great to see you.
Great to see you. Thanks for having me.
All right, so first, I want to get your thoughts on the new pied-à-terre tax that's in the state budget and this war on wealth that Jerry was just detailing out, because this is what we're seeing here in New York City. We're seeing the wealthy being attacked. We're seeing Ken Griffin saying that they're going to expand in Miami. They're all saying, as Jerry just said, goodbye. Your reaction?
I fundamentally disagree with this kind of tax because it sends the wrong message that success and investment should be punished instead of encouraged. Whether people agree politically or not, the U.S. economy has always been built on entrepreneurship, investment, and capitalism. If you start discouraging business formation, corporate relocation, or wealth creation, it doesn't just feel un-American to a lot of people. It ignores the reality that cities are competing for the same capital and the same competition, which drives jobs, tax revenue, development, and long-term growth. From a real estate and economic standpoint, it's also counterproductive. These luxury home buyers aren't just buying property, they're fueling entire ecosystems. They support restaurants, retail, construction, hospitality, property staff, and generate major tax revenue and philanthropy that spreads far beyond real estate. And as you ladies mentioned, the bigger issue is mobility. Wealthy individuals and companies today can move. We've already seen it in places like Miami, attracting major capital and executives. So if policies start feeling hostile to investment, that capital doesn't stay, it relocates. And at the end of the day, you can't tax your way into long-term growth if you're driving away the very people investing billions into your city. Miami's luxury real estate market has become one of the clearest indicators of the broader wealth and corporate migration reshaping the entire United States. I mean, what's happening isn't just wealthy people buying vacation homes anymore. It's the entire relocation of capital, companies, executives, and influence.
Yeah, but that's turning Miami into a home, and that's something that Ken Griffin had spoken about. He said it's about education, it's about freedom of rights. I mean, basically, saying that, and not vilifying those that actually invest in the community. Ken Griffin, somebody that's invested in New York, well, now he's investing in Miami. I want to ask you this. I spoke with Fed Governor Stephen Moran this morning. He had a very interesting idea for rate cuts. Take a listen to what he said.
If I were writing down projections today, I might have one fewer cut for the year than I would have before the oil shock moved. Yeah. But because it brings additional risks, I still think it's important to front load those, which is why I dissented for a cut at the last meeting. If you throw 10 million people into an economy, you need 10 million places for them to live. If you cut down on that flow, you don't need as much growth in the supply of capital goods like homes. It doesn't push rents up. And you see that starting to happen in the housing market. Market rents have been growing at a very, very tepid pace. Very tepid pace.
Your reaction to that, because Katrina, he wasn't just saying, I mean, he was one of the dissenters. He is a voter as far as the FOMC goes. And he was very clear in that this is the way that you open up the housing market. Your thoughts?
What I gathered from his commentary is that housing affordability is ultimately tied to basic supply and demand economics. If population growth slows and rent growth moderates, that can help ease inflation pressures overall, which potentially gives the Fed more flexibility on rates over time. But for home buyers, the biggest benefit would be mortgage rates stabilizing or coming down. Even a modest drop in rates can significantly improve monthly affordability and purchasing power. But I also think we need to be realistic, right? Affordability is still a major challenge, especially in desirable markets where inventory remains tight. So while softer rent growth and more balanced market and are positive developments, buyers still need more housing supply and more certainty before many fully jump back into the market. What I'm seeing, though, is a healthier environment beginning to emerge. Buyers have more negotiating power, less bidding war fatigue, and more opportunity to make thoughtful long-term decisions instead of panic purchases. Well,
on a larger scale, though, I mean, you do say that nationally, that we're getting to a healthier, more sustainable phase. That things are, beginning to normalize. So basically, we're seeing kind of the market become unstuck, and the market has been stuck for the last at least 2 years.
And the housing market is showing some resilience because the biggest factor is that inventory remains historically low in many desirable markets. Of course, it's different all across the nation, but millions of homeowners are locked into extremely low mortgage rates. That hasn't changed. So they're not eager to sell unless they absolutely have to. At the same time, demographics remain supportive. So millennials are still in prime home buying years, and lifestyle migration trends continue benefiting states like Florida, Texas, and the Carolinas. We also have a fundamentally different market than 2008. Lending standards are significantly stronger, and homeowners today generally have substantial equity. Now, I want to emphasize that the entire, nation, it's very difficult to give a blanket statement because you do see markets in Florida doing well. You also see markets in Florida that have too much supply. There's parts of Florida that have too much supply in the condo market, but then you see astronomical sales in Miami-Dade County and Palm Beach County, which we've never seen before. And it's not just Ken Griffin moving. You have just Jeff Bezos. You have so many executives moving, relocating their families, relocating all of their executives. And I truly believe that this time it's going to stick. It's going to be permanent. It's not going to be like COVID where they're coming for a short duration. And you can see this when you visit Miami. The infrastructure is changing. Yeah. More roads are being built. You're seeing the change firsthand.
Katrina, it's always great to have you. And talk housing, our favorite topic. Thank you.